Bienvenidos todos al seminario.
Welcome everyone to today's seminar, Anthropology about Money and Economy. Today we'll have Dr. Bill Moore, Professor Bill Moore, for a bilingual session.
Hello everybody, welcome. This is a bilingual session. We will welcome you to the ADE seminar, Anthropology of Money and Economy. And the session will be held bilingually. What you will have to do in a moment, if you want the Spanish translation, is to click on the globe at the bottom of the Zoom screen and then select your language of preference. This will ensure that everyone can speak in their language of preference and everybody will be able to hear you. When you hear someone speaking in a language you don't understand, you will also hear the interpreter speaking in your language. A Spanish speaker should speak in Spanish and then the interpreter will speak in English. Ahora sí les quiero explicar, esta sesión es bilingüe, como les decía. Todas y todos los participantes en un momento tendrán que dar clic en el globo situado en la parte de abajo de la pantalla y van a seleccionar el lenguaje que dominan mejor. Durante la reunión, las personas de habla inglesa deben hablar en inglés y el intérprete se expresará en tiempo real en español. Los hispanohablantes deben hablar en español y los intérpretes lo harán en tiempo real en inglés. Como es un webinar, las preguntas...
This is a webinar. Questions will have to be done through the chat because we weren't able to offer access to everyone as panelists, but we do have 3 people who will help us with your questions. Andrew Crawford, who is a graduate student, who is Australian, but is at the University of Hamburg.
What is your university, Andrew? Bueno, es de Alemania. Y Nina, que
Is
va
Austrian, and Nima, who is doing her doctorate at UC Irvine, and Usuria Boitis from Barcelona, who is finishing her doctorate and is doing a fellowship at CIESAS. The meeting is part of our seminary, which is a partnership between CIESAS and UCI with the Institute on Money and Technology and Financial Inclusion with the University of Texas in Irvine. Now I'll be presenting you to Dr. Bill Moore.
Which is the Center for Advanced Research and Postgraduate Studies in Social Anthropology, and the University of California, Irvine, IMTFI, is the Institute for Money, Technology, and Financial Inclusion. We welcome Dr. Bill Moore, who is Dean of Social Sciences and Professor of Anthropology and Law at UCI. He is the author of a number of books, of course, but the latest ones is How Would You Like to Pay? How Technology is Changing the Future of Money. And he is director of the Institute for Money, Technology, and Financial Inclusion at UCI. I should introduce myself. I am senior researcher and professor at the Mexican Center for Advanced Research and Postgraduate Studies in Social Anthropology, and a member of the National Research System and the National Academy of Science. So with this, let us start. And I welcome Bill. I thank him for accepting to give a talk to us on what's a central bank digital currency and why do they matter even if they never exist? Thank you very much, Bill. I welcome you.
Thank you. Thank you so much, Magdalena. And I'd also like to express my thanks to CIESAS and everyone who has come today for this talk, as well as Emiliano here, who is doing the translation. Thank you so much, Emiliano. I will do my best to go slow so that everyone can get a chance to hear your translation and so that your brain has time to do the important work that it's doing for us. And also I'd like to acknowledge Jenny Fan in the background here at the Institute for Money, Technology and Financial Inclusion, who's making everything happen and help set up today's webinar. And just a bit about my own background. I've been studying the impact of new technologies of money and payment on people's everyday well-being for some time now. And I'm particularly interested in understanding how infrastructures that facilitate payment are never politically neutral. They often represent settled political claims, arguments that happened once and that then have ended. And the tracks got laid for the way that money would move. And they're laid often in very non-neutral ways. There's a politics here, in other words, and my own work strives to open up that politics of payment so we can make it visible and then also make visible some of the alternatives that might be available in the present. And also just a comment on the topic of today's talk, central bank digital currencies, which I'll be abbreviating CBDCs. I know that there are likely some true experts here with us in our virtual Zoom today, as well as people for whom this is a totally new topic. So I'm just going to give a general overview. I'll say a little bit about how I became aware of CBDCs, and then I'll offer my provisional take, my provisional understanding and conclusion so far on what this potential new development might mean for money and payment. But this is all very provisional, as the title indicates, you know, CBDCs might not ever really exist. So why even talk about them if they might not exist? Well, let me just jump in about how I first learned about them. I first heard the term central bank digital currency at the biannual cash conference of the Deutsche Bundesbank in Munich. And this was in September of 2019. This is a conference where people at central banks who manage cash products like banknotes and coins come together to discuss trends in consumer payment behavior, the shifting demand for banknotes and coins, and what might be on the horizon, particularly as more and more people adopt digital payment. So again, this was September 2019. I was in Munich. This was a time in Europe and around the world of historically low interest rates, which continues to this day. As many of you know, central banks around the world have been trying to prop up economies by keeping interest rates low in order to inject more liquidity into markets. But the issue is when interest rates get closer and closer and closer to zero, and people start to think they might go into negative territory, people start hoarding cash. They take their money out of the bank in the form of cash and keep it in their homes. This hoarding of cash then leads to the kind of deflationary slowdown that Japan has been going through for nearly 2 decades now. And cash hoarding, this practice of people taking their money out of the bank in the form of cash, defines the effective lower boundary for interest rates below which central banks can't push it, right? They can't go lower than that if people are taking it out in cash because they can't touch the cash. But in September 2019, when I was at this conference, something new was going on. 3 months earlier, Facebook had announced its Libra project. And Libra was going to be a digital currency that Facebook would offer, backed by a basket of world currencies. And there was a lot of confusion about it. And even today, in 2021, when the proposal has morphed into something called Diem, the design of this currency, its intention, how it's going to work, its future is very murky, very uncertain. But back then in 2019, the fact that a major global platform company with over 1.7 billion users at the time seemed to be getting into the business of money, of offering a private money, set off a lot of alarm bells. And it also gave lift, it gave some energy into a set of proposals that central banks had been kicking around for a few years. And this was the idea of a central bank issued digital currency, or CBDC. At that cash conference, and again, this is the people who worry about getting the banknotes out, right, into the economy, who worry about cash, physical cash and coin. At that cash conference, the big question was, if Libra led central banks to offer their own digital currency, would it be done in conjunction with the demonetization of cash? Would it be done in conjunction with abolishing cash? And what the central bank people were thinking about was the following scenario. They were at the effective lower bound for interest rates in several countries already. But if there were a central bank digital currency, if there were a CBDC, and cash was banned and everyone had to use the CBDC, then central banks would be able to push interest rates below zero. So without the opportunity to withdraw my money in the form of cash, I'd be forced to spend it or else watch as its value declined in my account. And then this would basically make me start spending, right? And the increased spending could be the thing to get the economy going again. Now, most of the people that I spoke with realized that this would be a pretty terrifying scenario for them. It would give them vast new powers over the economy and over everyday consumer behavior, and would only serve to amplify all of the conspiracy theories about central banks that already exist around the world. So they were very scared. They were not just scared of this because it meant, potentially the end of cash, which was their business. They were scared of it because of what it meant for the increase in power of central banks. Nevertheless, interest in CBDCs has only grown since that time. In May 2020, about 30 countries were exploring the possibility. Today, there are over 80 supposedly doing so, and there are several pilot projects that have been launched in one way or another in the Bahamas, in the Eastern Caribbean Currency Union, in Sweden, and in China. But what is a CBDC anyway? It's still pretty difficult to say. What it's not is a cryptocurrency like Bitcoin. Bitcoin is based on a system whereby participants in a network hold copies of a massively replicated ledger that keeps track of all the transactions in the system. Anyone wishing to transfer value to another participant posts that transaction request to the network. There's a competitive process among the participants to verify the transaction, which I'm not going to go into here. But once the transaction is validated, the ledgers are all simultaneously updated. And the system's designed so that there's no need for any central accounts keeper. And this is why you'll hear Bitcoin or other cryptocurrencies often described as decentralized, in contrast to the kind of centralized digital databases through which banks keep track of accounts. Now, although some CBDC experiments seem to use a similar kind of database as Bitcoin, they're not public. That is, they are not open to all the participants in the system in the same way. Rather, they're closed systems that are maintained by one tech provider or a consortium of different entities like payment providers and financial institutions. They're also not public in that so far, they have not been publicly disclosed. In most cases, central banks are contracting with corporate entities to assist them in the design, development, and deployment of their digital currency. Now, this is not necessarily a problem, and it's not wholly out of line with current practice. Central banks use private suppliers of paper, banknote components, or whole banknotes all the time. For instance, the Crane Paper Company has held the contract for banknote paper for the United States since 1879. And GND is a private German company that provides banknote components and banknotes for countries all over the world. And I have little like samples you can look at, and ways that they will help you explain how to design your currency for security and beauty and all the things that we want a banknote to have. So this is normal. To me, the main issue in the case of CBDCs is that given the experimental nature of the offering, the private provision of the technology, and the social networks of CEOs and other professionals that are involved in current pilots, we just might want to approach the private provision of CBDC tech with healthy skepticism. For example, the pilot being run in the Eastern Caribbean for a CBDC called Dcash is on technology built by a company called Bit Inc. Bit Inc. also just apparently won a contract to develop a CBDC for the Central Bank of Nigeria. An examination of its senior leadership reveals high-level executives formerly with the online retailer Overstock.com. And Overstock.com will be familiar to those of you who keep track of the Bitcoin world, because it was the first publicly held company to accept Bitcoin as payment for goods in 2014. So all that I'm saying here is that it's really interesting if you want to dig into it, and this is kind of a research project for somebody, to start looking at who is on the boards of these companies, where did they come from, what are their pre-existing social networks. Or take Enzia, I believe is how it's called, Enzia Limited, which developed the Bahamian sand dollar. The local Bahamian newspaper reported that its CEO, a man named J. Joe, promised, quote, "We won't be greedy," unquote. Now, when you have to say, "we won't be greedy," it sort of begs the question and makes me think of Google's slogan, "Don't be evil." And finally, another CBDC experiment in the Marshall Islands got put on hold when one of the partner banks, First Hawaiian, threatened to pull out of the Marshalls if the CBDC went forward, because they felt that the business relationships were way too opaque. It wasn't transparent enough for them. So First Hawaiian was like, we don't want to play unless we get some more transparency. So it's been put on pause. So to get back to the question, you may be asking yourself, what's a CBDC? And as I said, it's difficult to say. Some of the proposals and pilots are trying to imagine a system only for use between the central bank and financial institutions in one country or between several countries.
Recording in progress.
And this would be called, this is what's called a wholesale CBDC. And the aim is to create a system to facilitate interbank transfers in a faster, more efficient manner than is currently possible, especially across national boundaries. The idea here is that Bank A could transfer value to Bank B without having to have the central bank act as the intermediary, debiting one account and crediting the other account. Instead, somehow the bank could push the funds to the other bank directly on a ledger held by the central bank denominated in CBDC. In the United States or the Mexican context, you can imagine this replacing the automated clearinghouse, the ACH, or replacing the Sistema de Pagos Electrónicos Interbancarios, SPE is what it's called in Mexico. In a cross-boundary context, you could imagine this replacing or somehow augmenting SWIFT, the interbank communication system. A CBDC that allows instantaneous push payments from one bank to another in a different country on one central bank's ledger potentially eliminates the need for those kinds of systems. And a wholesale CBDC thereby would essentially improve the plumbing of interbank clearance and settlement. So that's the wholesale. The proposals that gather the most interest and media attention, however, are the retail CBDCs. The idea here is to offer digital cash products for use by individuals and businesses. In some instances, they might be a form of central bank issued e-money, like a digital prepaid account managed by a bank or other financial intermediary backed by central bank funds. In other instances, they might be actual accounts at the central bank held by individuals and accessed through your mobile phone or some other device. In the case of retail CBDCs, however, it's not clear what problem they're trying to solve. As Nima Yomo, who is here joining us, and hello Nima, and thank you for being here, as Nima points out in a soon-to-be released paper with the Filene Research Institute, the focus is on running after something new or seeking to provide a counter to what China is doing, rather than strengthening the existing technical infrastructures, reforming legacy systems, curbing corporate monopolies, or instituting legislative and regulatory change to force banks to serve everybody, to serve the underserved in particular, at competitive prices. To be fair, all of the efforts towards so-called faster payment schemes in the US and the European Union do represent an attempt to update those legacy systems, but so far their progress has been uneven. In terms of the stated use cases, however, what these people doing these pilots say about them, take the Eastern Caribbean Central Bank pilot Dcash. It's explicitly aimed at remittances within the Eastern Caribbean common market. And that makes some sense. There's a lot of geographic mobility up and down the chain of islands in the Eastern Caribbean, and having a digital means to send money would be safer and faster than what people do right now, like sending cash in envelopes on boats, for example. Similarly, the Sand Dollar project in the Bahamas was meant to allow easier payment across that archipelago. In terms of actual use right now, however, it's hard to say what's really going on. I sort of looked at a bunch of local newspapers and newspaper websites, and the comments suggest skepticism at the very least. One commenter wrote, all in capital letters, "They are taking from us, filling their bellies till they bust," which sounds great in English, by the way, for Emiliano. Another reports that as of just a couple days ago, this is from October 8th, this commenter wrote, "No one seems to accept the Sand Dollar for payment, and it appears to have no advantage over a credit card." The Swedish e-krona, meanwhile, seems stymied right now by design challenges and the crucial question of whether it will function offline. And I should point out that it's also been bedeviled by the fraudulent launch of a cryptocurrency scheme, also called the e-krona. So you can just look it up on Google and don't give them any of your money because it's not the Swedish central bank, it's a scheme. The Chinese so-called digital yuan, or digital currency electronic payment, DCEP, is another pilot that to my mind raises a lot more questions than it answers. In this version, the central bank offers digital currency to banks in exchange for an equivalent amount of bank money. The bank then issues the CBDC to its customers in digital wallets. The system is a lot like existing mobile payment systems in China, Alipay and WeChat Pay, but in this case, using money created by the central bank instead of money from a commercial bank. In theory, this would prevent the possibility of systemic risk if Alipay or WeChat Pay should fail, if one of them should go bankrupt, if something bad should happen to the network, and so on. It could also potentially replace commercial banks' money creation, or at least put a curb on it. The system is designed, however, to not pose a threat to the existing banking system by not allowing interest on CBDC accounts. And just as an aside, interestingly to me as an anthropologist, the pilot for this currency was rolled out almost the same way as WeChat rolled out WeChat Pay. There was a lottery that offered people free digital wallets full of digital cash in the form of digital red envelopes, the digital hongbao that people give to one another for Chinese New Year. Now, here where I am in the United States, the Federal Reserve is expected to release a report on CBDCs any day now. We've been waiting patiently. I don't think it's happened today, Nima, but you could let me know if it has. What's interesting to me to watch, however, is how the existing legacy payment providers like Visa and MasterCard have been jumping into the conversation, issuing concept papers for systems that frankly look a lot like China's, but with, for instance, Visa as the issuer to banks of the CBDC money rather than direct provision from central bank to commercial bank. Now, also in the United States, the pandemic raised the possibility of opening up the central bank to retail accounts for everyday people as part of a piece of legislation which failed. So this law did not pass, but there was a piece of legislation put forward called the Banking for All Act. The Banking for All Act. Here, CBDC would be central bank money available to you and me, available to normal people, the same way that central bank reserves are available to financial institutions. The accounts were proposed to be interest bearing, and that, of course, spooked the banks who worried about a flight from commercial banks to the central bank and a corresponding loss of credit, and therefore a loss of their ability to sell and profit from lending. But that possibility of consumer accounts at the Fed during the pandemic was raised precisely because of the difficulty that so many people had in getting, and continue to have, in getting and maintaining bank accounts. And I think this is always a surprise for people to hear in the US and abroad, but in the United States, as many as 1 in 4 households at any given time are unbanked or underbanked. They may have a bank account, but they don't use it. They just maintain a minimum balance. So this whole issue of the large number of people in the United States who are and underbanked meant that it was incredibly difficult for the government to disperse relief payments in a way that those people could actually use. Here, where I am in Orange County, California, people received electronic checks from the government via email, only to have to go to the public library to use a printer to print the check out and then take the check to a check cashing outlet that would charge up to 12% in fees. Elsewhere in the United States, long lines formed at automatic teller machines as people who received relief payments on prepaid debit cards looked for an ATM that would allow the highest withdrawal and the lowest transaction fee. So given that kind of situation, a CBDC denominated account at the central bank would permit direct electronic payment if the system were set up to provide access to all through something like the post office network. And there's been a lot of discussion here and elsewhere about a revitalization of postal banking. Now in Mexico, the central bank offers QR code-based CODI, which connects through Mexico's interbank clearance system, SPEI, and it's SPEI, which I said earlier. Users without a bank account can get a basic account that will allow them with a phone number or an email address to load value into their account by cashing in at an agent and then pay using their phone by scanning a merchant's QR code. And this is set up by the Banco Central de Mexico. It works like WeChat Pay or M-Pesa in Kenya and ties in directly to the central bank managed interbank clearance system, SPEI. You don't need a CBDC, right? So this is doing the use that is sort of touted for CBDCs with no CBDC. But I bet very few of my Mexican colleagues here have ever heard of this before, because hardly any banks offer the service. If you're a bank, you can do it, but none of them do. I actually, a colleague of mine, Bernardo Batislazo, says he thinks that 2 banks do it in Mexico. And it's because they can't make any money from it, right? Alternately, so another alternative for the and underbanked who live in a cash economy in Mexico, you can get a numeric code from your bank's mobile app. So if I have a bank account, I go on the mobile app, I log in and do my thing, and then I can get a 12-digit code and a 4-digit password that I can send to a person, which they can then use to go to an ATM, put in the code, and get out cash, even if they don't have an account. And this is a more common way for people with bank accounts to pay people in the cash economy. In the remittance space, things are even more challenging. There are apps like Globe66 that will generate a SPAY code that you can use to send funds to, but the bank has a 90-minute cooling off period before you can actually send the money from your account to the new account you just created. But if you want to send a bigger payment, like around $400 US, then it takes a separate authentication, which can take another day even to arrive. And this, again, was reported to me by my colleague, Bernardo Batislazo. Bernardo is both a payments expert and a dutiful son who regularly sends money from the United Kingdom back to his mother in Mexico. Now, to just back up a bit, and by way of conclusion, the discussion about CBDCs today reminds me of the early days of mobile money, services like Safaricom's M-Pesa in Kenya, the mobile phone-based money transfer system that uses text messages and cash in, cash out points for people to get their money. Then the service was promoted as heralding a new era of financial access and inclusion. The same is happening today with CBDCs. Then too, a lot of the behind the scenes discussion with government regulators was about tax collection, particularly tax collection from the informal market and small scale merchants. Same today, but a bit more upfront. They'll actually say, this might work for revenue collection. Now, I think the greater concerns are about government surveillance and control, particularly in the China case, and especially now that we are all so much that more attuned, we're so much more aware now of digital surveillance capitalism and also new forms of predatory financial inclusion that can come when credit products are pushed to our phones based on our payment histories. And it's just so easy to use, right? M-Pesa also helped launch a global discourse on cashlessness, on getting rid of cash altogether, a war on cash. As Brett Scott, a political economy commentator, argued back in 2016, however, he said, quote, cashless society is a euphemism for ask your banks for permission to pay society, with all of the attendant transaction fees and data capture that entails. It's interesting to me that the Dcash pilot in the Eastern Caribbean promises that your data won't be used or sold yet, and that there are no transaction fees yet, at least during the pilot. They pretty much indicate that such is coming if the pilot is successful, whatever success means. Now, to me, even if CBDC experiments and pilots never amount to much, they do serve the important function of spotlighting pressing issues for money. First, my colleagues and I have long argued that there's a public interest in payment and that there should be public options in payment. Money is not just a system of accounts or a way to reckon our credits and debts with one another, facilitated by commercial banks or any other kind of intermediary. It's a public good. As such, it should be publicly accessible. It should also be freely accessible. Currently, only physical cash has this quality. Anyone who gets it can use it and can do so for free. If I give you a 20 peso note, you receive 20 pesos, no more, no less. As Ursula Darlinghouse has written in a paper called Keeping Cash, this didn't just happen. This was a political achievement of the modern central banking system. It's not a given. It's also not necessarily a permanent condition, and it could go away if we're not careful. The discussion over CBDC concurrently with the pandemic spotlights the need for a public option in payments. Hence the Banking for All Act, which didn't pass again, or the renaissance in some countries of the idea of postal banking. Now, a public option has the added benefit of spurring competition. So far, despite all the fintech and app-based payment in the world, pretty much all digital payment runs on top of existing infrastructure created or mandated by central banks. Even M-Pesa has to tap into the banking system. And yet all those apps and all the card networks and payment platforms offer their services at a price. And historically, they have colluded with one another in setting those prices. A public option would force them all truly to innovate, to go after previously unprofitable market segments, to offer genuine value above just speed, and to offer real security. But again, as Nima Yolmo in her soon-to-be released paper points out, you could do the same thing simply by passing legislation forcing commercial banks to honor their public duties by providing basic accounts to everyone at cost. Or I would say you could even force them to offer basic accounts to everyone below cost, subsidized by fees and interest earned from higher value account holders, right? I should be paying more than a poor person, but that's not the case right now for my banking services. And what I do should subsidize them. And you could just do that by regulation. You don't need a fancy CBDC to force banks to do the right thing. As publicly chartered entities, states can compel them to do the right thing. Finally, a CBDC as public money highlights the responsibility of institutions to the polity that empowers them. And it should also reinforce for us the importance of democratic control over and participation in those institutions, including the central bank. You can still have central bank independence with democratic oversight. I think there's a way to do it. The possibility of CBDCs is a signal that we need more democracy if we are to head off the alternatives of a corporate platform-controlled dystopia or a surveillance society under the twinned powers of the platforms and the state. So I'll end on that. Is that hopeful, a hopeful note, or is it a dystopian note? I think it's a little bit of both. I want to also just take a minute to acknowledge Emiliano again. Thank you so much for being here with me and translating my words and thoughts, and for continuing to do so as we go into a discussion.
Thank you very much, Bill. It was extremely interesting, very, very innovative topic for a lot of us. And I very much welcome comments and questions. First of all, from the panelists, maybe Nina, Andrew, Usuri, or another of our panelists would like to ask a question, and then we would open it up to the general public. Who wants to start? Nina, would you like to start?
Yeah, I was thinking maybe we can take questions from the public.
Oh, okay. First, before you ask. Okay, I thought you were going to ask.
Because they kind of, I think, bring together a lot of questions that we are thinking about as well. Andrew.
Oh,
yeah.
Okay. Okay, excellent. Thank you. ¿Preguntas? ¿Alguien quiere hacer preguntas?
Would anyone like to ask a question?
From a couple of the ones that are here already in the Q&A, shall I do that?
Yeah, I think that'd be a good idea.
Okay.
We have one from Vinay Brandon. He's a doctoral researcher at Department of Sociology in Delhi, and he has 3 related questions. Can you see them, Bill?
I can see them, and I'll
Okay.
see what I can do. I'll see what I can do with them. Certainly, Vinay has posted a couple of questions here about open source technology in theory being converted into a res publica by sovereign law, and also has a question about private remittance infrastructures that could enhance financial inclusion across the North-South divide and ways of recirculating value by transposing monetary trust into networks of community trust. And that's the sort of thing that we already have, right, in the form of hawaldars and the kind of non-tech enabled, well, it's tech, it's a phone, but non-app based usually remittances that are of centuries long standing that cross the global South. And, you know, I think that this question about open source technology is very interesting, right? In the ways in which we can start imagining some coming together of public technology with open source technology. The question for me is always in a way that is still going to provide the kind of security that's required, and also what sort of regulatory change might be needed to make that happen for all of the various forms of compliance, especially around know your customer and due diligence that is involved whenever we're transferring money back and forth to one another. And then I see Shira Frank asks, can you imagine underlying plumbing or architectural improvements that might only be possible if we proceed with CBDC design and deployment rather than going the legislation route? And here, you know, I think the question here really gets at just how clunky the existing plumbing is. The existing interbank clearance and transfer systems are old. They connect up with the legacy payment networks like Visa and MasterCard in all kinds of weird ways, just because these things grew. There was no kind of central plan. And, you know, a lot of the efforts toward so-called faster payments is meant to clean that up, but they're trying to clean that up in a way that doesn't disturb some of the existing architecture. I think no matter what, you're going to need some regulatory change, even to get to the point of saying, let's do a CBDC. And it's at a kind of basic level and at a systems level. At a basic level, you need to know if the law that animates your central bank gives it the ability to issue money other than in the form of book money or banknotes, right? Like, how does it work in your country? It might be different. There might be specific rules around the provision of e-money that are covered by entirely separate parts of the regulatory system, as is the case in the United States. On the architectural side, again, you're going to be dealing with a lot of those legacy infrastructures, some of which are quite powerful and aren't going to want to do it. So again, I think there's probably going to be a need for some regulatory muscle to make things happen.
If I can come in here, because
someone broke in. Yeah, go ahead.
A bunch of questions kind of relating to this privacy issue that you've sort of touched on, in terms of asking, you know, about tracking of the government watching where money goes. But then I've heard other discussions about maybe this could be a benefit if people could see where their tax dollars went. So if you had a more public blockchain platform where it's like, this tax dollar went to pay for this bridge, I'm happier about my taxes now. I mean, do you think that's a valid use case for this kind of technology?
It's a fascinating idea, but the downside, of course, for governments is that then people would see where their money really goes, and it's not going to be that this tax dollar went to that bridge. It's going to be that this tax dollar went to this corporate subsidy or something, or to this defense contract. So it is, in theory, the kind of thing you could do that would certainly be great for you know, marketing and probably for people's good feeling about the thing. But then on the flip side, if it can track my tax dollars, then it's also going to be tracking all of my other payments. And do I want that?
We have
The-
go ahead.
Go ahead. I was just going to say this question here from Narcisse about monetary policy conducted in a CBDC environment. That is an enormous question. And if I can ask maybe Jenny, in the chat, I posted a resource, a really foundational paper by a couple of people at the Bank of England. And the link is there, Jenny, in the Google Doc. And if you can just put it in the chat, there it is. I really, really recommend this paper on precisely that question, because the monetary policy implications are really, really big and really, really interesting here. So I'm sorry, Nima, you were going to cut in.
Oh, no, I was just going to bring together two questions from Andrea and Melissa, also touching upon privacy, questions of why people who have been unbanked and not catered to so far should be trusting CBDC, and also that the possibility of anonymity is not present in any kind of electronic transactions, CBDC included. So how do we think about that? And my related question, also to add to Andrew's earlier point, was we're thinking about taxes, but in the light of all of that's happening, the ANA papers, the Pandora papers, so there are all of these things that are happening on the side with already existing systems. And how do we think about like possibilities of preventing such like ways in which money is being used? At the same time, it's often talked, like, retail is something that's related more to surveillance, as opposed to these other stuff that's going on that often doesn't come into the picture.
Yeah, no, they're great questions that touch on kind of the importance of public trust in any money. This is a thing that is always an issue, not just when there are financial crises or bank runs, but whenever there's any sort of financial instability or a shock to the system that leads people to run to cash, even if the value of the cash itself is declining by the second in some cases. I think that there's an assumption in the CBDC discussion that because it's coming from the central bank, and the central bank is kind of the thing that's backstopping the entire financial system at the end of the day, that you can trust it. But we know already the incredible amount of distrust in central bank institutions, which was only heightened after the global financial crisis, when they were seen as bailing out the big banks, but not bailing out everyday people. And that's why, for me, the whole resurgence of postal banking is really interesting, right? Because people might not trust the central bank, but they love the post office. And the post office system globally has long been seen as kind of accessible and politically neutral. So pairing those things together is kind of interesting. But the questions too around like the Pandora papers and the fact that there is so much large scale tax evasion by political leaders around the world, by well-connected, well-heeled, high net worth individuals, ultra high net worth individuals, really does beg that question too about what are the limits currently of democratic oversight over this thing that we call the economy, when there seem to be different rule books for different players in that economy. That's a more general question about trust in institutions and the failing trust in institutions. And I would say because our regulatory authorities have not had the teeth that they need.
Yeah, so there's a question relating to that sort of trust and maybe kind of power issues from Oscar Gonzalez, who's asking if the value is it taking away immense power of the present commercial banks. So if you wanted commercial banks to be less powerful because you found that they're not democratic institutions, should you be supportive of a CBDC, do you think?
Well, it's certainly what the commercial banks are afraid of, right? The commercial banks are wary of CBDC because they feel that it would take away some of their power, particularly in the proposals where a CBDC account would earn interest, right? If a CBDC account is somehow just a prepaid, like a prepaid digital card or something, it's just a kind of e-money that doesn't earn interest, then that's much less of a threat to commercial banks. The Banking for All Act, didn't fly because of this concern of existing commercial banks and financial institutions losing this power. But it's certainly I don't know. I have no idea if it's like a good threat or not. Like, you better be better banks, or we're going to make a CBDC, because I think probably the banks would think, okay, really, are you gonna? Let's look at these experiments. How have they gone? Do you have the capability to do it? What other capabilities do you need to do it? Right? And they might just be like, you haven't brought us faster payments, so we don't believe the threat. I'm not sure. It's a fascinating question.
Maybe you can translate the comments by Antonio.
Yeah.
Yours.
So
Sorry.
I've put it through Google Translate. Maybe that's,
Well, Emiliano's okay.
I can give it a try.
all right.
All right, I'm gonna give it a try on the fly. Bill, can you hear me? I want to make sure Bill can hear me though. So Bill needs to be in the English interpretation channel. I'm trying to reach you or Bill. Can you hear me, Magdalena?
Okay. Antonio asks whether state monies can facilitate access to the to buying crypto money, and the other way around. If you pass from crypto money to a stable money backed by the government. Stable monies are actually not backed by national governments except the Peruvian sol. There is uncertainty that repeats itself if the digital dollar counts with funds to back the dollars that are emitted. The monies that are stable monies for now are not emitted by the government, but at the same time, they are getting ahead of governments like the euro with the ecosystem Cosmos. At the same time, Europe wants to emit Euro Digital Pass in October 2023. The investor prefers and needs stable money apart from the dollar or pegged, linked to this, and cannot wait for central banks. Then he also says that there is fear that the people stop using their fiat money. In this way, the government could continue spending, people spending and propose taxes for those for the paranoid to be overseen. In Italy, there have been trying to do this for years. There are proposals like Siena to do anonymous transfers. At the same time, they have crypto money that are stable in dollars, jumping from one part to the entrepreneurial control. And then he says the author speaks of the digital krona, the e-krona, emitted by the Swiss central bank. And I've lost it. Where is it?
And then,
sorry.
yeah, no, it's okay. Then
Yeah.
he provides a link to the
Yes.
Riksbank report, and people can
Yes.
see that if you click on the Q&A and just scroll down to where Antonio
Yeah.
has posted his comment.
Oh, okay. Okay. Sorry. Yeah, you're better than I am. Sorry.
So I think the question is about stable coins, which is the idea of a cryptocurrency that is backed by a government issued currency or a bunch of government issued currencies. And the question is also getting at the issue of the potential for competition between stablecoins and government issued currency. Would people, go to a stablecoin over fiat money, et cetera, et cetera. And I think one thing to bear in mind with everything having to do with the crypto space is that in comparison with the whole rest of the economy, it's still itty bitty, teeny tiny, minuscule, tiny little. You read like headlines of whatever, I'm just going to make it up, $1 trillion of capitalization in crypto markets. But compared to the world, that's nothing, still nothing. It's not the potential for competition, I think, that really gets this conversation going, competition with stable coins or private issued currencies or whatever. Right now, it's the fact that so many of these things are open to fraud, to taking people's money and running away with the bag, which has happened in a lot of cases here, and also concerns over money laundering or ransomware attacks using crypto and so on. So it is, I think it's important to always kind of keep in mind the scale of what we're talking about when we talk about some of these developments in money vis-a-vis the rest of the economy. Even the Chinese, CBDC, in comparison with the rest of what's happening in China with payment, is small, right? Will it scale up countrywide? It's really hard to know. A lot depends on how the central bank works out its relationship with the commercial banks over this new product. A lot depends also on the political situation in China and the extent to which the Chinese authorities decide, Alipay is too big or causes trouble in some way, which is definitely a concern, right? We've seen the state really kind of muscle into the tech industry in China of late. But again, I just say to these questions around things like stablecoins or competition with fiat, just sort of bear in mind the scale of what we're talking about.
Okay, and then we have from Melissa Rapp. She asks, remittances and access for the underbanked or unbanked are often touted as motivations for a CBDC. Why would people criminalized or marginalized by the state trust a CBDC?
Yeah.
Are there ways to put guardrails against authoritarianism in the CBDC design? Yeah,
it's an excellent question, and that's why I tried to end on my hopeful / dystopian kind of thing at the very end. I think this is the huge question. There's the big question of surveillance, of also exploitation. We've seen how often financial inclusion projects turn into predatory inclusion, turn into ways of pushing loans on people who can't pay them back and that sort of a thing. And we've also seen how, as Andrea Nietzsche says in her comment, the central banks often seem reluctant to curb the power of commercial banks. So it is interesting that this conversation is taking place right now, right? Taking place after the great financial crisis and then the crisis that hit due to the pandemic, that really is kind of giving some lift to some very old ideas and some very new ideas about what it truly means to have a democratic money. And that's a hard question, and that's going to entail a lot of difficult conversations between central banks and banks, central banks and their other constituencies. And it's something that we all, I think, have a responsibility to keep track of and to take note of what's happening to us. Because as I said, the fact that I can hand a note to you and value is transferred is a historical political achievement. And it's one that could get rolled back.
Wow.
So,
okay. Yes.
I think we're out of time, Magda.
Okay. I was going to say thank you so much, Bill. Thank you for your, I guess there's no more comments from the panelists or questions. Yes, we are out of time, Bill. Sorry. Thank you so much for your presentation. It is very, very interesting, very exciting, something to really look into much more in depth. I thank everybody for their participation, and Bill and Jenny, who was behind the scenes all the time, and Emiliano for translating. And I hope to see many of you soon in our next session, which we have not planned the date for yet, but we will let you know.
Thank you so much, Magdalena. Thank you, Andrew and Nima, and everyone who came. And Emiliano, thank you so much. I'm sorry if I went too fast. And Saul and Jenny, thank you too. And have a wonderful day, everybody.
Have a wonderful day.
Bye, everyone.
Okay.